Jennifer, morning. Afternoon, John. Hey, Jim, good to see you. Speaking of see ya, let's get that video going. Hey, Jonathan. All right, let me open this up. Let's see, where is the video hidden? Let's move it there. I can see. All right, welcome everyone. Hope it is a good trading day for you. What a great week we ended up with last week. I was in an event for 3 full days, so I didn't really get to see a whole lot of it. A little bit, certainly checked it at night and followed along with some of the positions that we have open, but overall it was a great move. We're going to talk S&P for sure today on what some of the next steps are. But as we get started in here today, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you like something you see, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on that trade, that setup, or that indicator. Keep in mind, one of the things I'm going to be asking you early on today is what trades did you do? When we talk trades, we assume everything to be non-funded. I don't care if you did it funded or not. I just care that you did it. Drop those trades in. It's an accountability factor for you. It's throwing it out to the world that you're out there doing this, right? So keep that in mind. I'm going to ask those in a moment. You may want to pre-type them. Don't send them out yet because I'm going to mix them up or lose them in some of the other comments. Excuse me. You want to type it in so you can just hit enter when I ask that question. All right. So what do we got happening this week? We've got Inner Circle coming up on February 5th, which is tonight. Mastermind group tomorrow night. We will be doing, guys, those that are in Mastermind, tomorrow evening is a 2-hour session. It is our core training that we'll be doing tomorrow night. So keep that in mind, okay? Trading You comes up on the 8th. E-mini Think Tank Q&A on the 13th. Patterns in a Flash Q&A on the 15th. Power Hour Trading Coaches Playbook, a regular schedule, as is Pop. Covered Call and E-mini are all on their regular schedule here today. All right, here's our follow us page. Make sure that you are following along with the latest and greatest. We have a ton of content getting ready to release. We're at a point where we're going to start releasing one blog post every single day. Blogs. Probably 1 to 2 podcasts a week. 5 or 6 videos we're hoping for on our shorts. 20 or 30 a week is what we're looking to be doing. So again, really excited about the metrics and what we've got in place and what we're looking to do. So make sure you follow along there. And if you have not checked out our TikTok, we are going viral on some of our videos. We've got 600,000 views on one of our options videos. So woohoo! I'm excited for it. So we have 2 TikTok channels right now. This is just the main one. The second one is a Trader's Mindset one. We haven't done a lot with it, but we are going to. We're known as faceless videos, but it's all on Trader's Mindset. So you're going to see a lot more of that stuff starting to hit the airwaves from us very soon. Here's our Trading Boss Manifesto. Make sure you download this. You can get it on the homepage. You can get it on the robertjroy.com. It basically goes over what it is to us, what it means to us for you to be a trading boss. It's really the journey that we're trying to set you upon to help get you from where you are to where you want to be, right, in the market as a trader. All right, and then we've got the great freebies. Guys, you're going to see a lot of resources coming out over the next week or two on just free resources that we have available. Take advantage of them, download them, use them, watch the trainings. You will not be disappointed with what you're going to get out of this. And my favorite number in the world, it's all free. This is our give back week, right? We do this 3 or 4 times a year just here. These are all great things that we can do. We came up with 2 new ideas this morning that we're going to start creating one for. One is going to be a tech stack where we're going to create trainings. It's probably going to be a book, an ebook on technical indicators that we use and how to use them effectively. So you're going to see a lot of that type of stuff starting to hit, come across. I think that is it. Yeah, okay, we're going to leave it at that. All right, so now is the time. What trades did you do? Drop them in. Today was a busy day for me. I missed it, man. Wednesday, nothing. Thursday, nothing. Friday, nothing, or very little anyway. Management, nothing of new trades. But the event I went to was not a stock market event. It was a business event. And listen, I believe that bottom line, right? I believe every one of you should be in masterminds, multiple. And what I mean by that is you should be in a mastermind that relates to your business, right? If your business is trading, you should be in a trading mastermind, right? And when I say your business, if that's what you want your business to be, you should be in that mastermind, right? That's number 1. Number 2, I think you belong in a business mastermind, right? One that relates back to building your business and so forth. Now, if you don't have an actual or physical business, and you're just focused on the trading component, that's okay. The trading one has to come first. The business one is second. I belong to 2 trading masterminds. I belong to 1 business mastermind that is building your business. And I belong to another one that is how to effectively market your business, right? The things that you need to do to sustain and stay alive and grow and so forth, right? So there's a lot of opportunity out there in the marketplace. We've got masterminds that will help set you over the edge. So definitely check that out. All right. Let's see. Ooh, balloon strangle. Oh, man. All right. We'll get to these. Let's see what we got here. So Roman said he did a balloon strangle on NVIDIA, 50% return on investment. Very nice. Jennifer said no trades today. Last Thursday, I made $4,370 over several directional trades. Nice job. Puts and calls. No trades for Brenda. John said Wheel of Fortune on Google, JWN, naked put on Baba. Cash flow today, $1,300. Really nice. Jennifer said also I moved many mutual funds to cash last week with the higher highs. I felt good. It felt like a good idea. Okay, there you go. There you go. Roman said also a balloon strangle on Tesla, 30% ROI. A balloon strangle is a strategy that Ryan Litchfield talks about them. It's really a strategy he's very good at. He comes in once a year to our Inner Circle, which is our highest level coaching program. And he teaches inside of Inner Circle. And this is one of the strategies that he does. And he is just kicking tail with it, blows away. No trades off this morning for Jim. Okay, nice. Well, let me share a little bit. Okay, so we'll look at the market. Well, we're not going to look at the S&P yet. We'll do that in just a few minutes. But let's look at what's going on. Okay, so but we are going to pull the market up just to get an idea, right? I thought for sure on Friday we were going to tip into 5,000. We did not. Our highest high on Friday. We didn't get to 5,000. The highest high on Friday was 49.74.47. I thought for sure we would just touch it, come back down, go into the weekend, everybody be fat, dumb, and happy, right? We did not get there. We're back a little bit today. They said last week is one of the biggest gainers we've had in a while. Overall, I mean, we're just hitting all-time highs, right? That's really the biggest part of it. But we can't sustain forever. We did reach up and not able to hit our fib level. We failed on that Friday afternoon. Today, we gapped down a little bit, continued to push. And then we had news out there on stocks such as Caterpillar, CAT. Caterpillar blew away the earnings, blew them away, right? Look at the gap up. Actually, let's do this. All right. So there's the entire fib. Let's go around. There's the entire fib, V bottom, V top, right? And we did a bunch of sideways move, nice breakout out of there. And we closed here on Friday. Today we gap up and we gap right into that 335.53. Our opening price this morning, 334.87. So 53 plus 17 is 70 cents. We got within 70 cents, and that's our high, right? Open was 334.87. 334.87 was the high of the day. And we started pulling back. So S&P pulling back. I mean, I saw pre-market. We already were down 300 points on the Dow at one point. I didn't watch a whole lot of the pre-market. I had other stuff going on, but I did see we were down nicely. So as the market opened up, I looked at this. Okay, what can we do? What can we take advantage of to capitalize on this? Whether it's an overreaction or not, I don't have an answer to. But it's an overreaction today with the S&P 500 going down. Right? So how do we take advantage on that? How do we capitalize on that? Listen, we may see this pop back up tomorrow or the day after, but I wasn't in this for tomorrow or the day after. I'm in this for now. Right? I'm in it for right this second. I'm not in it for today. I'm not in it for tomorrow, next week, next month. I'm doing this for today. Okay? So I looked at the puts. We did and again, everything we talk is educational purposes, right? We did the 330 puts, and they were about 4.25 at the time when we got into that trade, right? So if we look at Caterpillar, look at the move intraday. I mean, just nice, right? Very nice. Well, if we go over to an option chain, and you see the 330 puts, right now they're at 1135 by 1170. They got up to, I mean, we got out about 11.5. They got up to about $14 today. is where these options had made it up to. Right? We had 251 open interest with 1,375 volume. Right? 78, 76 delta, which didn't have when we first got started. It was a little bit lower on the delta, probably about 64, 66, somewhere around there, just depending where it was flopping around. Right? But you're in at 4 and out at 11, let's say. Right? That's $7. $7 move on Caterpillar. Really, really nice. Jennifer said, I'm long on Cat, have been for a long time. Okay, there you go. So Caterpillar was trade number 1 today. Right? Number 2 was United Healthcare. Now, on United Healthcare, so United Healthcare is one of the pop stocks. Okay. I don't care that it doesn't have enough open interest. I trade it anyway. I like it as a company. Always have, always, well, I shouldn't say always will, always have. Okay. I like how it moves. They're consistent moves. So to avoid going into options today that were very low volume, I went ahead and I did a credit spread on this instead. All right. And that's because I knew I was going to want to talk about it today. So we did a bear call spread. Now I did a very aggressive spread on United Healthcare. So let's go look at UNH intraday. Okay. So UNH. Okay. UNH had gapped up and ran. Right? This is today's candle. Gapped up. It didn't gap up. It actually had gapped down a little bit and ran up. Okay. So if we look at our first candle, that's this right here. If we go to a 1-minute candle instead and just back this up, back the train up, baby. Right? You can see the first minute we had this big run up. It was like, yes, we destroyed earnings. And they did. We destroyed earnings. They were up $14 in the pre-market. Wham! The next candle gave every bit of it back and then some, right? So it was a easy decision to say, yes, I'm going to do this. But now, when you do a credit spread, what does that represent? That means you're selling one position to open, right? And you're selling the leg that, if it's a bear call spread, you're selling the leg closest to the current price. And then you're going to buy the one above that. So this is your short leg. Your insurance is up here. The insurance is $2.50 difference because I did the 512 and a halves on that. So we had $2.50 of risk on this trade, right? And we took the entry. I did not want to take the entire trade at once. So I did something that is called legging in. What does that mean? Okay. That's kind of, the song, put your left foot in, put your left foot out, put your left foot in, shake it off. Well, that's what this is. You just put one foot in, one leg in, and I'm selling my leg short. Yeah, but Rob, you've got a naked call. Yes, and that's why, to me, I will not open an account with a broker if they don't give me full access to all options trading strategies. I don't care the risk associated with a naked call. If I want to trade it like today, there was a very specific reason for it, I did. If this was not such a market-moving event, meaning that the stock had a drastic gap up on a bearish day in the market, then I would not have looked to leg in the trade. I just would have taken the trade and bought my position immediately and kind of locked it in and locked in my profit right then and there, right? Potential profit, but locked in the premium I'm going to receive. Instead, I let this go for a little while and wound up getting in here, let me get a white pad. So let me get a notepad out here, okay? So we sold to open the 510 calls. And that was at 475. Right, and then the goal would be to buy to open the 512 and a half calls, right? And we didn't do that yet, right? But this gives us a max risk difference of the two strike prices. That's $2.50. That's our maximum risk in this trade, $2.50, right? So we're taking on $2.50 of risk based on the difference of the two strikes, but there's going to be a premium we receive, right? Because we sold this for 475. Oh, there you go. Good catch, Brenda. Oh, I wrote bot. I'm thinking too much about AI right now. AI bot. It's buy to open. Thank you. Right? Buy to open. Okay. So the maximum risk is $2.50. We waited for the position to come down, come down, come down a little bit. When it finally got to where I was comfortable with it, we went ahead and bought to open the 512.5 at $3.40. So my premium is how much? I paid $475. I got back. I mean, I got $475. I gave back $340. Where did the calculator open? Okay. So 4.75 minus 3.4, it's $1.35. So my premium received was 1.35. Had I done this right out of the gate, it would have been about 50 cents or so. 55 cents is what I was able to get had I done it right then and there and bought my option immediately. I chose to wait. Right? By doing this, my risk, my maximum risk is the 250 minus 1.35. That's $1.15. So if I am dead wrong in this trade, the worst thing that can happen to me is I'm down $1.15 in the trade. That's the absolute max for it. Margin required for a naked call. I don't know exactly what they held for it on that, Jonathan. But yes, there is a cost there. You're selling a naked call, right? So they're going to want, a percentage of that strike price. So if I sold the 500, they're going to want 25% of that strike price, give or take 25%, right? 25% is easy. That's about $125 per share they're going to want to have on hold for this, for the whopping amount of time of, 25 or 30 minutes or so. But yes, there definitely is margin, and it's a very good point. Thank you for bringing it up. It's just cash that has to be available. Now, you don't need the cash. It could be a stock. You could have a covered call written on it. It doesn't matter. It could be the SPY. It just has to be something that's liquid that could be sold right now if it had to be. Right? It's not the mutual funds or that are in a different brokerage account. It has to be in that account and available either in cash or available for sale. And again, it doesn't matter that it's encumbered. Even if you have a covered call on it, you could still use it. So when you look at rate of return, if I'm right on this trade, right, cash in my pocket was $1.15, right? That's the cash in my pocket. So it's cash in my pocket over cash out. So it's $1.15 divided by cash out of my pocket is 1.35, right? That's an 85% rate of return. Oh, why does that not seem right? Let's try that again. Cash in my pocket, 1.15 divided by cash out of my pocket, 1.35. Yeah, 85%. Okay. So phenomenal rate of return, right? Let's see. So Roman said, so if I sell the 510 calls, 10 contracts, how much margin would I have to have? So roughly margin, Roman, one contract would be about $12,500 for one contract to do one. Right, but it is really broker specific. So you want to check with the broker and ask them. I've got the cash in the account. Again, we did them all time funded, right? That's all we talk about here. But I have the cash in my account, so I'm not worried if it goes to that. I have enough stocks and things like that available that would cover it if it had to go to a margin call. So it's cash in my pocket over cash out. So if you look at the difference between these two, right? We had a $2.50 risk, but my premium that I took in, wait a second, my bad. All right. Maybe I'm doing it wrong. Hold on. Cash in my pocket I put 115. It's not, it's 1.35. Divided by cash out, which is $1.15, 1.15. I had it upside down. So I'm making $1.35 and risking $1.15. It's actually 117%. on that. Good catch. Yep, you got it. John got it. Barry got it. Yep, perfect, guys. Thank you for that. See what happens when you take 3 days off? All right, so this one worked out well. Very pleased with United Healthcare. Okay. Keep doing its thing. Keep chugging down. Right? Can I manage the position, wind out of it? Absolutely. Anytime I choose. Okay. I'll try to be out of the trade today, but if it had to go another day or two, it's a spread. I'm not worried about it. It's supposed to lose value. So I'm good with that if that's the case, but I really don't want to. I'd rather be out of it today because it did really have great news. It's just being subject to the market condition right now, where the market is getting slapped around a little bit. All right. And then we had, let's see. So we had SPY on pivots. Hey, are you guys able to hear me? Oh, never mind. Never mind. We're good. Someone had said they couldn't hear me. All right, good. Okay. So look what happened here, right? Let me get my drawing tool. We took a gap down. We played around on this line right in here. And when we finally broke, there was a retest in there and a drop. We took the put on this. Did I write down what I did? I didn't write down the put. We got it at $1.70. I didn't write down the strike on. I got a just piece of paper that I took notes on for today. I didn't write it down for the strike, but we got in the put at $1.70. And guys, we got out of the half the put at the midpoint, right? So we're getting in at 493, let's say, and the midpoint is 492. So there's about 70 cents. It's actually about, it was 60 cents, roughly. There was 60 cents right here. And then we came down, and on this candle, we got taken out of the balance right here. And now that's at 490 3/4, where we got in at 493. So we were up about $1.35, I think it was. Let's just call it $1.30, make it easy math. So yeah, $1.30 and 60, that's $1.90, call it $2. So that was about $1,000 if you did 10 contracts. If you did 2 contracts, you made $60 on 130, you made $190 on 2 contracts. Right. So overall, very happy with pivot trade. It didn't work out as well on the Qs today. Come on. Okay. So on the Qs, it was more of a waiting game. And still didn't work out the same, right? So we finally got the break, the retest, the drop, took the trade. We got out of half of the trade. We made our move up, and I got stopped out, I believe, at the second half of the trade right there. We still didn't make it down far enough that it would have worked. The trade was okay. We didn't make a whole lot on it, but overall it was profitable, but it didn't work as well on the Qs. The NASDAQ got slapped quite a bit earlier. Right? There are stocks like NVIDIA holding her up right now, but there is definitely some concern of, is she going to be able to sustain through these kind of market conditions? You know, there's the talks of Powell. I mean, I saw the Powell stuff last week. There's the conversations now that there will not be a raise in March, or we already called that last week with the numbers that were out, that unless something crazy happened, the percentage of chance of there being a rate hike. We already anticipated there would not be a hike. Powell is now talking about he wants to see more evidence that we're getting closer to being able to hit a 2% inflation rate, which we're nowhere near at this point. So I don't know why we're talking about 2%. There's other factors going on in the world, and that's the U.S. right now with the provocation with Iran, Iraq, whatever it is, right? In the Middle East, a lot of concerns there of that going back and forth, right? Brendan said last night on 60 Minutes, he said maybe in May. Yeah, and that's all great and fine and good. And, you know, but the expectation of, oh, we're going to see 7 rate cuts this year. Yeah. And now if he starts in May, the biggest question is going to be how important is his job to him versus the economy? Is he going to push it to try to influence the presidential election? Or is he going to do what every other Fed does and back away and say, we're not influencing markets here? We're going to let it do its thing. Because if we left interest rates alone for 4 more months, it wouldn't hurt us, right? We're used to it now. The housing market will pick up then. It's not going to crush us. We'll be okay, all right? So I don't know what he's going to do when that comes. But it just depends how selfless, not selfish, selfless he is in the thought of, okay, it's my job, and if if the Republicans win, well, maybe I don't have a job, or they certainly won't bring me back the next time. So how much of that is a matter to him versus, hey, I need to do this because it's the right thing. Yeah, Tripp said Powell did an interview on 60 Minutes last night, talked about politics having nothing to do with it. Yeah, of course it has nothing. Listen, it's not supposed to, but realistically, right? Is there a phone call from a senator friend of his or a White House person that's, hey, you know what you're doing? We could use some help. Would you mind doing this? I'm not saying it is, but there's always that you scratch my back, I'll scratch yours type mentality that we've got to take into consideration. Politics never play a role in their decision. Well, and Brenda, listen, what's he supposed to say? Oh yeah, we let politics influence all the time. We're a standalone agency, no politics involved, but we let it influence us all the time. We can't say that, right? They can't say that. So, but there definitely has to be some pressure from areas as well. Mostly like a group of controllers above him. There you go, Deborah. And again, I'm not beating on the Fed, guys. They've done well over the years. And listen, if anybody can honestly say that they feel that there's never been a politician that lied, right? Or someone in that type of arena has ever lied, maybe. You might be right. But I'm going to say it's probably a good chance that a politician at some point has lied in their career, right? And it could have been for the good of everybody, right? Just hiding a secret that no one needed to know that there was a bomb going to explode in New York, but they caught it, right? Or wherever it might have been. So I get it, right? But how much of this is actually going to play into the election will be a big part of where the S&P goes and what happens with the overall market condition. The balance of the earnings coming out on on the market right now will have a big influence. We've already seen about half, I think it is. It's going to have a big influence on what happens with the market. And it's not just the announcements, it's the forward-looking statements. We see a concern. There's going to be an issue. We're not going to do as well. We're pulling back. Snap laid off 10% of its workforce, or announced 10% layoff today, right? When they're doing it, I don't know, or did. But are we going to see more of that taking place? Immunity or no immunity? So, all right. Good. So there we have, let's see. Jim said in the Sunday Market Traders Report, Intelligence Report, Tony recorded it for you. He went into other scenarios as well about what might happen in the market. And I didn't get a chance to watch it yet because I got back pretty late last evening, and Monday is just a go day for me. It doesn't stop. First meeting is at 8 o'clock in the morning, and then it just runs on from there. As soon as we're done with Power Hour, we run 15 minutes into another meeting. I've got a call at 3 o'clock. I've got a 4:10 call. I do pop tonight. So Monday just runs straight through. It is a non-stop day for me, working in the business, not on the business. So very little in trading and things like that. So I didn't get to watch it yet, but Tony does a great job. Did he do a good job with the gym? How was his report? Did anybody watch the intelligence report from the weekend? I'm curious. Like I said, I know Tony. He does a phenomenal job. I never would have asked him, right? Good stuff. Yeah, yes, very good. Yep, it was good. All right. He was so bearish, and that's okay. That's his opinion on what he believes is happening in the market. Right now we're gonna talk about S&P in a few minutes because that's what the topic is today. So we're gonna kind of do a twofold. We're gonna do the topic and the S&P review all at one time because the topic is on S&P. Oh my God. He went crazy. I usually do like 3 to 4 minutes. It was 19 minutes long. Well, listen, I appreciate it. I called him and said, hey, Tony, I can do it. I'm going to be out of town, but if you've got some time, he goes, done. It's on my calendar already. Love him to death. He does a great job for us all the time. Right. There are definitely pullbacks, Jennifer. Exactly. Traders need to watch it for another perspective, Jim said. Well, I appreciate it. Y'all know, you guys have heard Jim in here for years now talking. So listen to him, guys. He's got a good idea of what's happening out there. So check out Tony's video. It's our Sunday newsletter that comes out every Sunday. You're going to see it in your mailbox at about 1:30. If you go over, if you just save the page for the link, When you go there, it's the same page. We changed the video, we changed the content that's on the page, but it's the exact same page. We don't have different pages for each week. We don't store any of it. We get rid of it. It's just a new page in there every week, right? So it's a great opportunity to go in and watch that video, but also see what's happening in the market. But you can go there on Friday afternoon, because usually, don't tell anybody, but usually by before 6 p.m. on Friday, we've already got the video loaded. Okay. Excellent. So let me take us back into the presentation, right? And normally we would talk S&P 500 at this point, but the topic is the S&P 5000. What should you do? See, not 500, 5,000. Some of you misread it when you saw the emails come out on it. Oh yeah, the S&P 500. Nope, 5,000. Now it's not a new index. It's not changing. Nothing is going to happen differently. This is the S&P 500 hitting 5,000. And if you go back historically and you look at oil, right, crude oil, it's getting very close. You look at crude oil, right? We're up here at 120, 130, 134, 146, 138, 132, 144. And it just kept playing this game of the up and down, up and down, up and down, getting close to that $150 level. Literally in pre-market, one trader said, okay, good, I'm going to buy 1 barrel at $150 a barrel. And he shot the price up to 150, and then the next barrel brought it right back down. So definitely some collusion going on there. Why? Why did they do it? They did it because there was so much anticipation of it. Everybody was so focused on the 150, the market was becoming a disaster area. We were whipsawing up and down, and it was making too much of a hassle for trading crude. This way, we rang the bell, and that's the way it was described. That's how I've said it for years. We rang the bell, and we were done. Right now, everybody could walk away. Even if it ran back up there, it didn't matter. We've already hit 150 at that point. Well, we're kind of there now with the S&P 500 at 5K, right, on the SPX, right? We're pressing up into it, and we're getting up there nicely. We saw the pullback. Whether or not we push up and break out this time, how much of this are we going to see over the next couple of days, weeks, maybe month or so? I don't have an answer to it as far as how often or how long that pattern is going to go, right? What I do have the answer to is this. When we look at the S&P 500, we have gone from 4,200 or so, 41 and a quarter, somewhere around there, all the way up to 4,500, 4,900, 49 and a half, right? With that 5,000 level, that infamous level just above us. We didn't even make it up to the negative 272. We got close. We got dang close. Actually, if you look, the negative 272 is at 49, 80, 85. That's this line here, right? And we got a high of 49.74, 47. So 49.75 versus 49.81, 6 points away we were from just hitting that line, okay? And then, of course, we've got the 5,000 just above that, the dot dash line that's inside of there, okay? That next line setting up. So we've got these levels to contend with. And that's what you're going to have to do. This has to be a very strategic analysis that you have to do on the market to calculate what you see happening next. And it really takes, you cannot be in position one in the chair, up here, hands on keyboard, trying to calculate what you anticipate happening. You must, you just have to do it. You've got to be backing out of the way. And you've got to be looking at this and asking the questions of what do I see? And just take note of conditions. What do I mean by conditions? Where are we in relation to the fib lines and the moving averages? Well, our bias is bullish. If you remember bias, it is a relationship of the price of the stock to the moving averages. That's the first part of it. And then the relationship of the three moving averages to each other. So if we start with the moving average relationship to each other, pink, which is the 8, is above the green, that's the 21, which is above the brown, that's the 55. So 8, 21, 55. That puts us in what's called a true bullish bias. We also look at, are the moving averages spreading apart? We're getting a little bit of spread on the 8 and 21 right now after that quick pullback and bounce there last week on Thursday and then into Friday. a little bit of spread on the 55 to 21 moving average, but this puts us in a true bullish bias. Our rank says, where is the stock price in relation to a fib line and or a moving average? Not a 100-point level. We don't use that for a rank. We're in the middle of these two fib lines. That's a rank of 3. So when I look at that, that basically says, yeah, get back in position 1 in the chair because ain't crap there. This is worthless to me right now as a trading vehicle. Now, we're not trading it. You can trade SPY, but we're looking at SPY chart. But it's telling me that we do not have a clear directional path yet. Doesn't mean we won't yet. So you have to start looking then at what are your surroundings, right? Where are the obstacles on the obstacle course? Well, the first obstacle is I'd like to see it do what? And maybe that's even a place to go better. Where would you rather see it go, up or down? So I'm just do this. The letter U for up or the letter D for down. Where would you prefer to see the S&P go next? What would you like to see it do? And if you don't know, you can type a question mark. If you like, I don't know what I want it to do. That's fine. While you're doing that, Barry had typed in a question or a comment. So SPX 4766 on 1227, 2021 would be afraid. I would be about 1.11 times this 5290 now. So we still have a little to go before we hit the previous effective high in today's dollars. Okay. So Barry's using the calculation going back historically and a percentage of move to the upside of where he sees it going to. Okay. So I've got a mix. I've got some ups. I've got mostly downs. Jennifer said up, it takes more time. So mostly ups. I'm sorry. Let me back up. So the tail end is probably about a 50-50 mix. The tail end of it was a lot of ups. The beginning were a lot of downs. Right? John said looking for 4887, right, which is that fib line in confluence with that 4900 level. I'm with you, right? Randy said up, Jim said up, Jennifer said up, it takes more time, and then there's a lot of them in there. Now, keep in mind, I asked you what would you prefer to see happen. How about this? Do any of you feel that you can will the market to move in your direction? I wanted to do this. Probably not working, right? No, of course not. No one believes they can will it, right? Maybe you do. I shouldn't say no one believes. I can will it, and it'll go against me. It goes steady. I am that powerful. Ha ha ha. Jim says exactly. Okay, so you're not going to will it. So you have an opinion of what you would prefer to happen. Right now, if I take those two scenarios and say, Rob, I would prefer, and this is me, truly, I would prefer this to go down before it goes up. The move to the upside requires much more work and a little bit harder for me to take an entry on. The move down starts to turn the 8 moving average over, gets it very close to that 4887 level, certainly under the 4800, the 4900 level. Right, gets it closer there, and if we can get a bounce off of that fib / confluence of the moving average, it's a great entry. The move up, I've got a breakout, retest, and bounce, and I've got a 5,000 just above there. It's an all-time high. It's a psychological level. It's a tougher place to get to. Okay, it's a tougher place to get to. Doesn't mean you can't. Right now, if it doesn't move down and moves up, you need to have a plan. Plan A, okay? I'm in a gunfight, and I'm a righty, and I'm going to draw with my right hand. If the guy shoots my right hand, I'm going to have to shoot my left hand, right? That's my plan B, right? I may not be as good. I may not like it as much, but if I don't want to die, I'm probably going to have to learn how to shoot with the left hand pretty quickly, okay? You make a choice of what you would prefer to see. That doesn't mean it's going to happen. Doesn't mean you'll ever get what you want. I love the song, You Can't Always Get What You Want, right? Just get used to it in the market is like the theme song for the stock market. You can't always get what you want. If we break out to the upside, retest, and bounce, now you've got a target of where you're looking for it to go. But there's an obstacle. There's the 5,000 level, and it's not just an obstacle. It's a psychological level that, are we really breaking out of it, or did we go, breakout, fail, breakout, fail, breakout, fail, and continue to do that again and again, right? So you've got to be very hyper cautious around here. When we look at what the S&P is doing and what we prefer it to do, you really have to take it day by day. You cannot make a hardline stance of this is what's going to happen. Because if it doesn't, you're stuck. You go, okay, I can't do anything now. No. I don't want to be the person. I want to have an opinion about it. But my opinion is just that, right? And one of my favorite phrases if I'm teaching a live event, we'd be at a live 2-day event and I'm teaching that event, I will make the comment in there that opinions are like belly buttons. Everybody's got them, but after a couple of days, they aren't worth anything. That's just your opinion, right? Hardcore fact is my opinion was I wanted to go down and it went up. Okay, pivot. What am I doing next? Right? Mr. Miyagi, best block will be there, right? How do we then take the entry even though it didn't do what I wanted? And bottom line is, you may not have one right now. You may go, oh, position 1, here we go. Sit back, chill out, just wait. I'm good. And I'm okay with that. You don't always have to be, ready player 1. Boom, I'm ready to hit enter now. Yeah, okay. Let's wait for the right setup. And that's where many traders screw up, is they're trying to jump in at a time when they shouldn't be jumping in. Right? They're just, I need to trade something, so it's close enough. No, there's no close enough. If you can't get the right setup, don't take the setup. Oh, I missed it. I was away from my desk. Don't go away from your desk. I don't know what to say. Set alarms. Set the trade up as a potential trade, right? Preload that trade as a trigger that when X happens, you get into the trade. When the stock hits this, you take the entry, right? But don't look at this and say, omnidirectional, just one direction. It's got to go down, because if it doesn't go down, you have nothing you can do, right? And you're stuck. And now by you saying it, I want it to go down, and you not understanding that what to do if it goes up, you've now set yourself up to fail on that, because you've told yourself you think it's going down, and when it goes up, you go, okay, I failed. I was wrong. It's not about right or wrong. I don't need to be right. I'm going to ask you a question. Yeah, Rob's rules, baby. Ka-ching, Roman. I love it. Right? I'm going to ask you a question. Can't use the letter R. Let's see. So give me a 1 if you would rather be right, or give me a 2 if you'd rather be rich. 1 if you'd rather be right, a 2 if you'd rather be rich. Some of your keyboards are stuck. Yeah, see, I don't need to be right. I can be wrong all day long. If it can make me rich, I'm good. I used to teach, when I would teach the live events, I would stand up there and say, how many of you have traded before? A bunch of hands go up in the air. How many of you feel that every single time you place a trade, it does like the exact opposite of what you thought? 3/4 of those people raised their hands. Yes, that was me, right? Of the people that said they've traded before, right? The other quarter lied and they didn't want to say it. So I said, I've got a simple strategy that will make you ultra profitable immediately in your trading. Oh, wow. When you look at a stock and you say, okay, I am bullish on that stock, immediately do the exact opposite. Fixed. And then someone said, yeah, but Rob, now I'm going to look at it and it's okay. I think it's going up. But wait, since I think it's going up, I'm going to say it's going to go down. But what if I really think it's going down and I'm saying it's going up so I can trade it going down, which I'm going to be wrong because it's really going up. Like, huh? Exactly. Right? The psychological piece steps in there. Yeah, I would like both. Jim, I would like to have both, but you can't. You can't eat your cake and have it too, because it's not have your cake and eat it too. It's eat your cake and have it too, right? It is the process there, right? So it's no different here, folks. When you look at this, analyze what you'd like it to do, have a plan, and then have a backup if it goes the opposite way. S&P 5000, I would be shocked if we don't hit it. I've been saying it for weeks now. We're going to tag it, just like we did with oil at 150. Whether or not we stay there, I don't have an answer yet. It really is going to depend on what else we're seeing out there, economic reports, what are earnings showing us, what investigations are going on government-wise. Is there, what happens with this new conflict in the Middle East now? How bad does that become? Does it set the U.S. up in another Middle East war? All of these things are going to play into it, right? New relief package coming. I heard something this morning that the Senate is putting something through to try to do a massive aid package for Israel, Ukraine, and shore up our borders as well. Okay, awesome, right? Can we afford it? Right? Oh, we're going to give $6 trillion away. Okay, great. That's not going to help us in the long run. It'll help us today, right? Not going to help us in the long run. I mean, we can fix the border solution easy. Just give it to the states. Let them take care of it. They'll fix it. They'll fix it. Right? But what's it going to cost us to get into a war and so forth? What's it going to cost us as in the economy? What happens worldwide? What happens to oil prices? There was talk this morning of, we didn't see oil prices go up after this conflict, and there's enough diversification of oil right now that we've got other places to get it. But, you go back to Ayatollah Khomeini days when he was burning the oil wells, right? And prices of gas went through the roof, right? We couldn't manage it. Okay. So all of these things are going to play into it. Pick a direction, develop a plan. If it goes the opposite direction, have your backup plan. Right? My GPS is my favorite backup plan. It routes a course, and if there's an accident, it changes it. Backup plan. You need a backup plan. What do you do if it goes the opposite direction? All right. Was this helpful? 1 for yes, 2 for no. Okay, so Tony talked about, Jim said the rut going sideways when the S&P is going up. I think he said that it's a red flag. Yeah, like I said, I got to watch his video to see what came of it. But excellent, good. All right, what stocks you guys want me to take a look at? We've still got about 12 minutes left or so. What stocks you want me to take a look at? And there are many of you that are brand spanking. Oh, man, I didn't say this. Darn it. Hey, Lee, I know we don't have a whole lot of time left. Can you do me a favor, please? Get in touch with Sean and get me the link to the new Power Hour page that he just built. And I'm going to want you to drop that in. All right, guys, while you're doing that, while you're typing in your symbols, here's what this is. Right? Every week you get an email that says, oh, we got Power Hour coming up this week. Okay? Well, what we're doing now is we built out a page that will be a Power Hour membership. I put some Fibonacci trainings in there. They'll show up on your membership page as well. But that membership is you will not have to go back and resubscribe to Power Hour every week. You'll have to do it one time only, and you are in Power. Every week, you're going to get the Power Hour links. They're just going to be sent to you automatically as if you went in and scheduled for it. Once we get that done, we're doing it on Trading Coach's Playbook. Next, we need to test it out and make sure everything is working. We've been running some ads to this, and we saw a good amount of people register. A bunch of you are in here today, so welcome for those of you that are brand new here with us. But basically what we do is we go through the training through the day. We look at the markets. We look at what trades have gone off. We look at your trades. We talk S&P 500, market, VIX, and so forth. And then we get to the point where where I ask you what trades you want, what stocks you want me to look at, right? I can't effectively or legitimately manage or set up your trades and say, oh yeah, if I was in this, I would get out of that stock. I can't do that. Okay. That's fine, Lee. That's fine. Whenever you get it. Yeah. Helen said, how wonderful. Yeah. So it'll just make it easier. We'll drop the link. You're going to see that coming out. Ultimately, we're going to wind up not having a 1 day, just register for this Friday. It's just going to be you register for for a Power Hour. Sorry. And that Power Hour will just be that link will just go on in perpetuity. It'll just go forever. And you'll just get a new link every week of where it is. Actually, we'll probably, once we get rid of you can only register for this one, we'll probably, I don't know. Well, I'm not sure. We got to figure out how we have to tag everybody for it. So let's see what stocks y'all dropped in. Brenda asked for SPY. Not a lot of stocks in there. So if you guys have others you want me to take a look at, by all means. So SPY, guys, we're same thing. We're at a rank of 3. We're bullish, but a rank of 3, true bullish, right? We ran up into the fib line on Friday, just about hit it on Friday afternoon. Pulled back today. I'd like to pull back to the 8 and the bounce. The problem is the 8 is a little bit more away from the fib line than I think I'm going to like it by the time it gets back there. So it'll be better than where it is now, but may still not be a perfect place, which means if I take an entry, I'm going to take it aggressive. So I see the 489 is our first downside on that one, Brenda. That was Brenda, right? Yeah. 489 is the first downside on it. And then that 487, which is the fib line. If we do keep pushing up, we're looking at 496. I'd look for the break, the retest, and the bounce, but then 500 is right above it. So we got to be careful with that 500 up there. Brenda also asked for Qs. All right. So there's the Qs. Look at this. See the high back here? This stay right here. Give or take right there. We hit it on Friday, and we're right back where we were. So we're near all-time highs again. For this, I'd love to see the pullback to the 426. Let me do this. Let's go ahead and go here. Go back to Qs one more time. I just want to see it in the symbol grid. So we're looking at about 10 3/4 is what it moves as a fibit. So about half of that 5 in jingle. But 10 3/4, we'll call it 11 just to make the math easy. So 426 to 445 is 20 points. So we need to split that level in half. So we're going to add a negative 809 in there. Right, 26 to 36 is 10. We've got 10 3/4, so that's perfect. So pull back to the 426 bounce, 436. Now, Brenda, this becomes a rank of 1, right? If we pull back to that 426, the 8 is right under the fib line. You got the 8, the fib line, double strength floor, right? 2 pieces of plywood on the floor, a lot more strength than just 1 piece, okay? So that bounce off of there gives us a lot of opportunity. I would definitely want to watch the recent highs. So where was the actual exact high? So the highest high here was 429.85, and this one was 430.24. So it's this candle right here, right? So we're going to draw a line off of that candle, right? I got the dot on the candle, so I know that's where it's from, right? So that high is going to become a struggle. So if we get the pullback to the 426 and we bounce, you get up to 428.5, 429, whatever level you choose, you probably want to tighten your stop up in there, because it's possible you roll right back off that high again, as we've done twice now, and pull back. But this way, at least you lock some of the profits in place. If it breaks out, considering opening the stop back up again to a normal trailing stop, right? But this way, you don't have to be sitting there watching it, and you're not giving all the profits back because your initial stop is down here somewhere, and you let it run all the way back down there before you take the trade, right? This pullback, when we get the bounce, magnifique, perfect. Should we redraw? I mean, we're back to October. So do we have so it's a good question. If from a time frame, we don't have to. Well, let's see. We're about $52 there, give or take. Here we're at 34. So no, I wouldn't redraw them at this point, Roman. Don't worry about the number of bars. It's the dollar amount we're looking for. So I think we're okay for now. We don't have a time frame issue. Yeah, this is on Qs. Yeah, so I think we're okay for now with it. All right. So Brenda, I hope that helps. Let's see. The next one I've seen there, multiple people had Apple. AAPL. Woo! Smack-a-bang-a doomerang, huh? They have just gotten kicked all over the place. So they're in a bullish bias rank of 3. They're in the middle of God's country, nowhere, right? It's like being in the desert or being in the middle of the ocean. You're nowhere, nothing around, nothing to help you, okay? So what would I like it to do? Punt, pass on it, forget this one. To me, the setup is too difficult to find a proper entry. At this point, I'd rather see it get up above the 191.61 a little bit, get above it, let the moving averages move up, pull back and bounce, because my moving averages in the middle make it too complicated. If I pull back to the next fib line, the 186.65, now I got the moving averages right above my head. It's too tight. It's way too tight. So I would have to pass on that one. Okay. So I'm going to say on Apple, I mean, I gave you the targets already. 186.65 is down, 191.61 is up. If you're day trading it, you get entries that will work. Awesome. Just be cautious of those levels. And then once again, if you get the bounce off that 186 level, you got to be careful of moving averages. They're just like right there. They're right on top of you, right? Ready to bite your head off. All right, so Lee dropped in that link, everybody. So go over to that new page, okay, for Power Hour, right? And there's your registration. Listen, realistically, we get it all the time. Oh, I forgot today was, I get emails every week. I forgot today was Power Hour. Oh, it was 12 o'clock already. Put in your cell phone number and we will be texting it to you. 95% of all text messages are read, right? Within a short period of time of receiving them. You'll have it right on your phone. So if you fill this out and give your phone number, it is optional. You don't have to, but we will be texting the information to you also, right? Which means you'll have less chance of missing out on one of the trainings, okay? So, and then we put one of the fib trainings inside of there as well, okay, for you. Perfect. Thank you, Lee, for getting that. I appreciate that. Let's see. Okay, Jennifer's asking for Meta. Interesting pattern on it, huh? Woo! Baby, right? They're eating lunch, people's lunch, right? So I'm not ready to redraw yet. We will probably in pop tonight, but we're probably going to drop this bottom and this high in here because of the move we've had. We're just out in left field, right? I'm going to put in a negative 2.618, which is what we ran into. We're going to put in a negative 2. I don't have one in here. Right, look at that. Huh? Look at that. Look at where we opened, right at the negative 2. Look where we ran up to, the negative 2.618. Right, and that's where we fell from. Right, we're back near the negative 2 again now. But we're still too big of a distance inside of here. We still are going to need to split this in half. And then that's today's fib. You know, today's candle right between the two fib lines again, right inside of there. So, so be careful, guys. Remember, this was was this an overreaction? I don't know. They pulled back today after this massive move on Friday. Okay. So we just got to be really, really, really careful that these massive gaps were not just the market maker trying to give a push and traders not supporting the move. All right. So for me, if we get a bounce off that 458 level, I'm going to trade it up to 473. I'm not going to fight it. If we fail, retest and drop, I'll trade it down to the 440 level. If we break the 473 level and retest and bounce, we got 488. I got a lot of room either direction it goes. Lots of room either direction it goes. You just got to make sure that you have a plan for whatever the move is, right? Should I go left? Should I go right? All right, Jennifer, I hope that helped. Tom's asking for Oracle. Oh, a little too much. Okay, this one probably needs a redraw somewhere. Ha! I just don't know where the heck to put it. We got stair step, pop, stair step, pop, stair step, pop, right? Then we got this one here, which might be the better choice, but we're already back to 100% of it. If I use off of this top, look where we are. And if I draw from here, we're already past the 882. So this fib already is no good, right? If I try to draw off of here, I can, and it's probably the best setting for us, but it's ugly with the stair steps in there. So we're going to leave it on that one because I don't have a better choice. 21 to 27 is 6. We've got 4, so we're going to add in an 882. You can see I have 2 colored lines for 882. We're going to put the black one in. The green one would be if I'm trying to take a Fibonacci 4-step trade. It's kind of a trigger to let me know what's going on there. Okay. So on Oracle, Tom, let's see, break this. Okay, I'd love the retest of the 114, right? The 113.65, confluence of the 8, true bullish bias. If we break the 117 retest and bounce, 121 is the next target. This it's a little bit higher price now, but you used to get amazing covered call premiums on it when it was in that $35, $40 range. We got absolutely amazing covered call premiums on Oracle for a long time. All right. All right. So let's see. Roman's asking for NVIDIA. And then we're probably going to wrap it up after these guys. Let's see. So NVIDIA. Yep. Just this is a ping pong trade, Roman. We're just going to look to trade it between whatever fibs it's at. Right. If it breaks out of the 688, I'm looking for the move up to 700. Right. Keep in mind, this was a $400 stock a few months ago, and now it's $700. And it's probably one of the best performers in the market, hands down. And I've been screaming at the top of my lungs. Netflix, NVIDIA, Tesla, those are my 3 favorites right now. Still are, still just kicking tail with them. Very, 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 very pleased with what's happening on those positions. If it fails off of the 688 level, Roman, you got that 672 as the downside for a short term. Day trade only, of course. I would be careful fighting the overall market on this one. Netflix was the last one. Okay, didn't even see a change. So we had a nice little pop. Earnings, right? I just got the new month just starts, February 1. Our cell phone provider gives us our Netflix for free. They just changed our plan that said, "Ooh, we're going to now give you commercials," which drove me nuts last night when I had commercials popping up when I'm watching Netflix of all things. So we're going to subscribe to whatever we have to upgrade it to get away from the commercial part. I can't stand the commercials. That's why I don't watch regular TV anymore. It's because of the commercials. So, but they've done extremely well with their new programs and catching people sharing accounts and such. They've had great increase in revenue because the subscribership has gone up, right? So I'd love to see the break of the 568 Roman, the retest and the bounce. Let's see. Do we have, let's call it 30 points, 68 to 9. Yeah, so we don't need a fib in there. That is the fib. That's the 809. So break the 568 retest and bounce. 594 is resistance. And we've had, really great moves along the way. So I think we could see that happen again. And keep in mind, this was, Netflix was $480 a few days ago, and now it's $560. Week and a half ago, it was $480. Right? So it has rocked. Yeah, it's definitely going to help Netflix's revenue, Jennifer. Cool. All right. Let's see. Roman said, do we need to fib it below the negative 618? Let's see. So we're at about 30 points, Roman. So we got 35 to 65 would be 3. Yes, we do. So we need to put a -5 in there. Good catch. Added during power hour. Right? Because I've got to explain where that line came from in pop today. Can't just have a new line show up and go, "Ooh, look what I did." And I'm going to make it very much in the way. So I have to move it before I can do the analysis, which means I will definitely see it. Yeah, same thing with Prime adding advertisements. Exactly, Tom. I just can't stand any of them. So, folks, I hope it was helpful. Have a great rest of your day. We're going to leave the room open a few minutes. You can grab that link in the free training on Power Hour. Go ahead and do just that. Have a great one. God bless. And I will see you all at our next update. Take care, everybody. Bye for now.